Money can be confusing, it's okay to admit that. Lots of people feel lost when it comes to managing their money. But guess what? You don't need to be a financial expert to take control of your finances. This guide will help you understand the basics of finance and investing. It's all about making your money work for you. Let's get started. Finance is simply how you manage your money. It's about three main things: saving, spending, and investing. Saving is setting money aside for a rainy day or a future goal. Spending is what you do every day to buy the things you need and want. Investing is putting your money to work for you so it can grow over time. Imagine this. You save $100 today. Great, but what happens over time? Unfortunately, something called inflation makes things more expensive. That $100 might only be worth $90 next year. Investing helps your money grow faster than inflation. This way your money keeps its value and even increases over time. There are many ways to invest your money. It's like choosing different fruits from a basket. You have options like stocks, mutual funds, fixed deposits, real estate, and bonds. Each one has its own risks and rewards. Let's take a closer look at each of these options. Section 5. Understanding stocks and mutual funds. Stocks are like tiny pieces of big companies. When you buy stock, you buy a small part of that company. If the company does well, your stock value goes up. Mutual funds are like baskets of stocks. They allow you to invest in many companies at once. This helps spread your risk. Section 6. The safety net. Fixed deposits and bonds. Fixed deposits are like safe boxes for your money. You deposit a certain amount for a set time period. You earn a fixed interest rate. Bonds are like loans you give to the government or companies. They also pay you interest. Fixed deposits and bonds are generally less risky than stocks. Section 7. Real estate investing in bricks and mortar. Real estate means buying property like houses or land. It can be a good investment, but it needs a lot of money up front. Property values can go up, and you can also earn rental income. However, remember that real estate can also be illiquid, meaning it might take time to sell. Section 8. Balancing risk and reward. Remember, every investment has risks and rewards. Higher risk can mean bigger gains, but also bigger losses. Lower risk means slower growth, but your money is safer. Your investment choices depend on your risk tolerance and your financial goals. Section 9. Your first steps into investing. Ready to start? Great. First, create a budget to see how much you can invest. Next, decide what kind of investor you are. Are you comfortable with risks, or do you prefer a safer approach? Then choose your investments based on your risk appetite and financial goals. Section 10. Avoiding common investment mistakes. Don't put all your eggs in one basket. Diversify your investments. Don't invest based on emotions or follow the crowd blindly. Do your research and seek advice from a financial advisor if needed. Remember, investing is a marathon, not a sprint. Section 11. Take control and watch your money grow. Congratulations, you've taken the first step towards securing your financial future. Remember to review your investments periodically and make adjustments as needed. Investing is a journey, and with the right knowledge and approach, you can watch your money grow and achieve your financial dreams.